So, it's the first session for me. So therefore, I may or may not come up to your expectation, because this discussion started with Aditya just a few days ago, and he felt that it was an interesting perspective that I present on family office, and why don't I, conduct this webinar. And the way I want to present this webinar is as follows. I will give you my brief story so that you are able to relate to me as to who I am. I'm not too sure if you gone through my website, but I'll try and summarize my journey in next 5 minutes. I will talk about the construct of family office in 10 to 15 minutes. I will spend time on, because my perspective of, as I understand from the market, being in the system for many years now, it seems to me that investment office is seen more as a family office vis-a-vis family office, which is a much larger, subject. But today, people are just focused on family office as investment office. I will share some of my examples over 10-15 minutes, and then we can do a Q&A. So I will start with my journey of how did I get into this family office, and the last 3-4 years have been with the investment office more very specifically. So I started my journey in 2000, in 1982 with Escorts 8 years. That was working with the family. I worked in the in family-run businesses for 36 years, of which 28 have been with you know senior positions. Sorry, yeah, I'm getting some distraction, but let me go on. Uh, the last 28 years, as I said, have been very interesting, very exciting. 2 years of the last 28 years, the first 2 years were with Ranbaxy, where I learned the art of treasury, forex management, working for the Dr. Singh's private office, the investment office, and also was running the international division. The second phase of the journey started in 1994 when I joined Hero Group. And that was the time when I started interacting with the families more closely, because I was associated, while the family, so I think I must tell you the size of the family was pretty large. There were four seniors, there were 13 second generation members in the family, and there were a couple of others. And it was a wonderful journey to understand what does every individual needs, etc. And there the first few years were spent more around understanding what's happening in the companies, interacting only with shareholders, helping fundraise, evaluating new business opportunities, looking at joint ventures. So all of that was very interesting and exciting. And the first large opportunity of really understanding what happens in family office is, when we talked about realignment. So, there was a realignment which happened amongst the family, the Munjal family. They split, but it was a very, very harmonious and amicable split. And this was only possible primarily because I was able to spend time with most of the families, understanding their needs, issues. Because if everybody wanted to be looking at only Hero MotoCorp, which is now Hero MotoCorp, earlier Hero Honda, it would have been a very difficult one to sell. But fortunately, one could understand what everybody wants and what everybody needs, and therefore things started moving that way. The So therefore, this 2010 was the first major uh, initiative, or you say a major milestone of realignment that happened at Hero Family Office. I then got aligned with the Munjal Brijmohanji Family Office, And that's when, we started looking at new ideas, new initiatives. We looked at realigning with the Hero Motocorp, buying out Honda, uh, getting in private equity, looking at new business initiatives, new ventures. And then there was a second realignment that happened in the family. And this was also, Mr. Sunil Munjal exiting from the group. And in this journey, when I was managing Mr. Munjal's wealth, that was really a great learning experience for me. And I will share some of the examples when I go through the journey. So let me, go back to the topic of our discussion, which is what is the construct of family office and what do we really mean by it? So I think the real issue that I have seen based on my interactions, and I will share some examples later on, is that we are truly looking at family office in a very, very narrow perspective. And that narrow perspective is that either you're talking about investments, where there is no linkage to the objectives, right? You have these wealth advisors come in and present some options. They talk about fancy things like asset allocation, risk appetite, and when you talk about asset allocation and risk appetite, there is really no connect with why I'm doing what I'm doing. The So therefore, in my view, unless you have set up the objectives of why do I want to have a family office, and if I unless I think like a business, to my mind, it is really a big issue because unless you have objectives, goals, why am I doing, what am I doing, it becomes very difficult. So I will define what, in my views, are the three objectives that I believe are important for a family office to become an institution. Uh, can everybody hear me? I just saw a message from Bharti Shah saying that she can't see or hear. Is the voice audible now? Okay, I see a lot of yeses, so I will carry on. So there are three objectives that I see if we really have to, think of family office as a business. So the first thing is, why do I need to run a family office? Why do I want to behave the way I want to behave? So therefore, three objectives that I have are as follows, and these are crucial. These are not cast in iron and stone. The point is that if you have a different point of view, you can always define your objectives, and this is to be defined more by the family than by the advisors. So my first objective is that ensure family harmony. Harmony is the key word because if we keep on passing any decision through the filter of harmony, we will have a wonderful journey ahead. We will not take wrong decisions. We will only support the decisions. We will play a wonderful role in enjoying the journey of family office. That is the key, enjoying the journey of running a family office. Protect and enhance the family brand and reputation. This is extremely important to me because if there are only two things that you leave a legacy. One, two, you always create wealth and protect wealth. So those are the two things that society relates to you with. So uh, in summary, ensure family harmony, protect and enhance the family wealth, brand and reputation, leave a legacy, uh, protect and grow family wealth, and seamless transfer of wealth. So those are the three important points. The other important point when you relate family office to, you know, family office to a business, unless you have the chairman or the CEO of this family office being actively engaged, it is extremely difficult for you to take those right decisions, and this journey then becomes more transactional than anything else. So objectives: ensure family harmony, protect and enhance the family brand and reputation, grow wealth and ensure seamless transition, and the office is managed by the the family member. It could be a junior family member, it could be a senior family member, but he has to logically enjoy this journey. So broadly, the family office can be divided into four buckets. So bucket one will be more around the alignment on various important issues, including code of conduct, values, long-term goals, legacy, perpetuity of institution versus monetization, roles and responsibility of members, etc. The second bucket is around risk and financial planning. The third bucket is around governance. And the fourth is MIS, accounting and compliance. So this is how I divide the four buckets. And unless you go through this in that order and sequence, it becomes extremely difficult to really see of it as a business. We will continue to see it as transactional, where I'm only focused on my return. And if the returns go bad, they go south. We take some wrong decisions, which may be not good for for value creation. So let me define for you the bucket one: alignment on various issues, important issues, including code of conduct. I'm going pretty fast, I know that, but given the limited time that we have, this is I, I have my website, which is www.sarchaadvisors.com, and where this entire construct of family office has been posted. So anybody who wants to go through it later on can go through that. And if there are any questions, based on that later on, it can be routed through Aditya's, your organization, and I will see how I can respond to them. So aspiration and values, long-term goals. Why am I doing what I am doing? And these have to be defined in sync with the objectives. Legacy and perpetuity of institutions. So, what does that mean? So do I need to monetize some of my businesses? Yes or no? The answer is yes. The roles and responsibility of family members, which is alignment amongst family members. If it is a small family, the entire documentation or code of conduct can be almost, very informal. And if it is, a larger family where everybody needs to be on the same page, then we will need to really codify, define. And I do not expect people to write 500 pages of documentation, because there is, really no way that you can remember all the 400 pages or 500 pages. It has to be as simple, as informal as possible, and depending on who all are involved, depending on the fact that you need to be on the same page, you start, creating documents, but they should be very simple. And I will give you an example as to what do I mean by simplicity, because internalization to me is more important than documentation. So I spoke about roles and responsibilities of family members, which could be in the area of alignment of family members, conflict resolution. If they have to exit, how do they exit, entry and exit from the businesses? The most unfortunate piece when we are looking at, the family office or family office wealth, we are only looking at the surplus cash flow, which is not really the way to look at wealth. It is the combined wealth of the strategic, real estate, and the financial assets which are available. Then there is the, so I can go on and on, but transfer of wealth, brand management, reputation are really the key areas. And, I must tell you, with this, given that this is my first webinar, it is, I'm missing out, or I'm losing out. I'm not getting into my flow as I normally get, because if you see my website, there are, some videos as well. But so trust me, I'm not too sure if you are able to get to what I'm saying or not. But given first session, first webinar, first time with no people in front of you, and trying to just deliver lectures is clearly a tough one for me. So we covered about alignment of various important issues, including code of conduct, Now, I briefly touched upon the bucket two, which is risk and financial planning. So there are four parts to this risk and financial planning. A is risk appetite and risk mitigation. B is cash flow. C is holdco structure. And D is compliances. So that is how I break up the bucket two, which is risk and financial planning. And just to give you a perspective on risk mitigation, so it's very difficult to define how do I what do I mean by risk appetite, and I will give some examples. Typically what happens is that a wealth advisor will come to you and say, please fill up this form, and I understand you are you know you have a moderate risk and therefore you should be 30/70. The struggle is that unless you follow the biochemistry angle of understanding the individual, the family, and the family members, it is extremely difficult to give some ideas. So unless you have a right brain inclination, it is very difficult to just do the left brain, which is just the physics and maths. So biochemistry is extremely important to relate to the family before you give any suggestions. And this is why I believe that the current ecosystem of family office is completely broken. Each one of the constituents, whether it is a product manufacturer or whether it is the advisor or the family, uh, there are complete misalignments of incentives in the way they look at things, and there is really a missing trust amongst each one of the three players. So that's something that I will talk about later on. So risk mitigation options. I'm just seeing some messages being sent to me as to what is the website. So it is, if you go under the heading family, within family, you will see this conceptual framework of family. You can go to the blog on the family, and then you can find it there. But the idea is this is a topic which can run for 3 days, and here we are trying to conclude it in one day. And my objective would be to give you, and I will summarize this conceptual family office framework in next couple of minutes, so that you understand what do I mean by actually this. So risk appetite, risk mitigation options, and there could be different ways to mitigate the risk. It could be, to me, the biggest one is if I am able to understand uh, why I am investing or why I am taking a decision. And running through a process, the chances are I would have actually, mitigated risk because I would relate to the risk. And I'll give you an example later on. So asset allocation. Uh, how does asset allocation come about? Today, you just say that 30% in equity, 60% in debt, and you must have some physical assets which should be 10%. But there is a way to arrive at this, and I will cover it in the cash flows in the next 1 minute. So, risk mitigation options optimize through deeper understanding, diversification, asset allocation, and if you have an opportunity to invest overseas, diversify your risk, active management of foreign exchange exposure. I would honestly urge to avoid foreign exchange exposure unless you have the ability to take risk and cut positions if required. Actively manage asset liability mismatch, uh, insurance. The other important piece is that, when today there are times the way things are panning out, people can just lift the veil and come to you, but it is important to create a veil. It is important to create a layer in between the investment and yourselves to protect yourselves, even though today the courts are taking a very different view. Leverage clearly is something which needs to be discussed, talked about within the family. Why should I do what I do? And by defining risk, you need to define uh, the goals in terms of the objectives of investment. What comes first, safety, liquidity, or returns, in that order. This is what I have propagated always. And life becomes that much more easier. So, having spoken about risk appetite, now let me come to cash flows. So, cash flows, there are 4 or 5 buckets that you need to clearly define. Why do I need these cash flows? What for? And at what interval? What period? And that will define what could be the length of the investment and the asset allocation. So, for example, I break this up into five parts. Lifestyle, which is I need, the to maintain my lifestyle, I need some money. There is a safety pot, which I will put aside the money where I, as a family, may or may not have complete access. It should be driven more by, uh, somebody having another key for this. What are my existing business needs? What are my strategic and long-term business investment? So one of the important pieces about strategic and long-term investment is I learned from a friend of mine that you know your identity is because of your business, and therefore you will see people not disengaging from business or not selling the business, because money by itself is not going to fulfill your need of social aspiration. So therefore, there is always a need to have a long-term business engagement. And if I talk about family office today, even the HNIs or some of the professionals, people have salaries of 10, 15, 100 crores. Even they have to spend enough time in defining why they're doing what they're doing. So, for example, a guy who moves on from a job. So let's take my example. You know, since I have evolved spiritually, so I have really no issues. But it's very difficult to be spiritual, be humble, be empathizing, gratitude, etc. And therefore, in this world where we are driven by economics and monetary, connects, you need to have a good position, or you need to have uh, a good business. Uh, I already talked about the financial investment objectives are based on cash flows. So now let me define how does this asset allocation work. So let's say lifestyle. I will define a cash flow. I'll create a cash flow for next, let's say, 3 years, 5 years, and say I need this much for running my home. I need this much for my jewelry. I need to buy. I'll buy a plane, and these are my expenditure for the plane. This is for my children's car, etc. So that's all lifestyle. Safety part is that in the worst situation, if something happens to me, right, or if I need a cash, then I should be able to get it without any problem. I should not have any liquidity issues. So we defined it as, let's say, maybe 10% or 20% of the overall wealth to be kept under safety pot. And therefore, it could, so different people have different versions on this. So there is a school of thought which says, please keep everything into debt instruments, more like mutual funds, or something which can be encashed within, let's say, 3 days or 5 days or 10 days. Uh, so therefore, this should be a longer tenor, and therefore you can decide depending on debt or equity. So you'll keep building this cash flow and decide on how much do you allocate to debt and equity. The existing business needs should be again 3 years, so more short-termish. Strategic and long-term business investment, it's very difficult to find the right investment, and therefore different people have taken different view that so long as I am able to liquidate my investment, and people are even to take some risk in terms of the mark to market, and therefore they may place money into equity and the others into debt. So this is how the cash flows will help you define what is the asset allocation and what is the tenor of uh, the investments that you need to make. Uh, Different families, depending on the size and the opportunity, will define how much do I need to do in-house, how much do I outsource, and therefore, based on that, and depending on the size of the investment, you will do a direct equity. Could be listed, unlisted. You could do a third party, again listed, unlisted. You could do commercial property. You could do gold, precious stones, etc. My only sincere request to people is that unless the family who's driving it relates to these assets, they should not invest in these assets. Do not just listen to a few advisors. Do what is relevant more, they'll say, than otherwise. Because if you are driven not by your own sense, and you connect with the asset class, you are bound to take wrong decisions. Uh, so I discussed in risk and financial planning. A was the risk appetite, B was cash flows, and the third is the holdco structure, which will help you think through. I go back to the first point of the aspirations, alignment, etc. So you must think of creating structures which will facilitate exit if a person has to exit, because today the families have very different the family members have very different perspectives about what they want to do, and therefore my one of my things that I talk about harmony is that even if you separate, even if you split, but you can live happily and you can live in harmony, that's good, because there should not be any acrimonious fights over the assets that are to be split. That will create a much bigger problem, and you will lose all your reputation and wealth, and the transfer of wealth decision making becomes that much more difficult. At a tactical level, you need to look at, the income tax is one of the major considerations. Where if you are now, the laws have been much more simpler, but earlier, equity should have been only in one company, the debt should be in the other company, so that there is no confusion between the business income and the equity income, capital gains. We should be very aware and clear about the GAR, because now that becomes that much more important. Uh, if by chance you have overseas investment, avoid tax havens, and the D is compliances. So let me summarize for you what I have discussed so far. So one is the alignment on various important issues, including code of conduct, uh, which was aspiration, values, roles and responsibility of family members, role of family in the business, uh, wealth preservation, brand management, responsible citizens. That was as far as the goal one was concerned, which is alignment on various important issues, including code of conduct. The second one was risk and cash flows, and risk and cash flows was broken up into understanding the risk. And I want to re-emphasize here: if you understand, the understanding of risk is not a one-way stream. That you raise question, uh, you know, uh, and you get answers in 2 minutes. You have to be a clone of the family. If you are not a clone of the family, if you do not understand the DNA of the family, you can never advise. This is my firm belief, being a philosopher, psychologist, and I call myself a guy with a 36 years of experience, but a 21-year-old student of philosophy, psychology, and the digital technologies, and which is where I am able to be very current. And today only I would name this company. So this guy is trying to redefine the business of wealth through use of technology. So I wrote to him, "Those you are doing a wonderful job. What you really need to do is to focus on the right brain as well. The technology can help you understand, the physics and the maths, but understanding the psychology is more important than understanding just the physics and maths." Let me come to bucket three. The bucket three is governance. So therefore, whatever I have discussed so far, this needs to be managed, and there is, a role that needs to be played by the family, by the outsiders, to ensure that outcomes are in line with risk and cash flows, and so governance. First and foremost, the family member has to take responsibility of all the decisions. Today, you have many advisors who will come and tell you that, you know what, I told you so. So if you are, winning, if you are making money, he would say, I told you so. Uh, and if you are losing money, even then the guy will come back and say, I told you so. So in order to cut the trap of I told you so, if you do not relate to your philosophy, starting with the values, the higher purpose, why I'm doing what I'm doing. Let me give you an example. So let's say if you are in a healthcare business and the markets have taken a knock, you did an interesting evaluation and you spent a lot of time in understanding the business, because your purpose is not just about understanding the returns. You are much beyond returns, because there's an impact that you want to make. And therefore, I told you so will not help, because this guy only understands a bit of you and not fully you. So that's extremely important. Which is why I'm saying the family member needs to be the chairman. The role and composition of the board can be, decided. It could just be one external advisor, because at the end of it, whatever we may say, the family will need to take a call, right? They want to be in complete control of their business. So even today, when you think about creating trust structures, etc., and that's a very interesting subject. Who is the trustee going to be? Can I give control to the trustee? Can I also look at uh, you know uh, an institution? So there are no institutions. The unfortunate piece is that the family office is a recent phenomenon, and it has become a flavor of the day today just in the last 6, 7, 8 years. And of these 8 years, 3 years have been bull market, which is from, let's say, year 14, when Mr. Modi came into power, and for the next 3.5 years, has been a bull run, and people have made 3 times, 4 times, 5 times the money. And the tolerance level will start to the tolerance and the patience will start to set in now, primarily because the next 6 months. So let's say you made money for 3.5 years, you would want to give yourself maybe a year or year and a half before you start doubting yourself, and then you come back and say that I wish I should have done that. So, family member to be the chairman, you must have an advisor who has the guts to say you are doing wrong. Helping the family to ensure that you are you're not doing right, and stay with it. Now, the issue is, I have always lived my life as, in Hero, as a Vidhur of Mahabharata, where my role is to be very candid upfront in advice. The decision at the end of it has to be taken by the king, which is the family here. So, there is no, we should not frustrate ourselves with a view, why is he doing the way he's doing? Because the advantage there is that if you are able to, you know, not relate to the outcome, but enjoy the journey, and be very clear, what is expected of me, and therefore what do I deliver? So, those are really wonderful things. Uh, the governance team then has to ensure that the decision process is followed, information is shared, the meeting and review of outcomes. So there has to be some structure around this whole process. And the last piece is obviously MIS, accounting and compliance. And broadly speaking, today we do not focus on compliance. So, for example, I'm a very stickler on, where is my asset? I can't see it. So where is the client? So I'll give you my personal example. So while I do get the CAMS report of my investment, but I also try and ensure that HDFC Mutual Fund gives me a separate certificate. So, and where is it lying? Who's giving me that validation? So these are some of the things which are extremely important. We forget about the record keeping, and that becomes a real issue. Now, I can go on and on, but let me now give you my personal experience of my journey vis-a-vis the investment office, because that is what you folks really, want to relate investment investment office to family office. So when we started off, when Mr. Munjal exited, and we were looking to create our own investment office. So the journey has, you had to go through a journey which is to really get to understand what is the appetite. Because the first step we did was we invested only in debt instruments. We created a 16-page investment portfolio statement. Trust me, it, when I first drafted and we asked some of the advisors to give us that policy, it was, again, more mechanical rather than, having some flesh on it. So it took us almost around 3 months to create a investment policy statement for debt instrument. And guess what? When we developed our equity policy, it was, it is just half a page of defining not the details, but saying that we are long-term investors. We will not have any long knee-jerk reactions. We will not invest more than X amount of money in this asset. So, and that investment policy statement for a risky asset was just half a page. And imagine, the debt investment was almost around 16 pages. So therefore, as you learn this, as you follow the process, it is it's extremely interesting to go through the journey rather than coming to the outcomes very quickly. So let me also uh, so we started off with having an advisor with us, okay? And we very quickly realized, because when we started questioning the advisor as to, why should we be in this fund A or B or C, we realized that, the CEO of the advisory firm delegated the responsibility to the next level, to the next level, to the next level, and therefore the discussion was happening at the gatekeeper level of the fund with the lowest denominator in the company, because his role was just to get information. And then when I reached out to the CEO and the CFO, it came out that, what I was. So when I asked these guys, who did you talk to and who was the guy there? And because I said I'm getting different answers, and that's when we decided that we'll have to build our own team, because our portfolio was very large, even though our risk appetite was okay, but you have to really manage it. And therefore, when we started off with debt, what did we do? We started off with liquid funds. We started off with short-term funds. But in the interim, since in the business you have an auditor, okay? So for debt, we got in, we got in CRISIL to audit our portfolio. And they had just about set up that, this separate service offering, where they would validate and review the credit portfolio, give you what is the sensitive sectors, what is the sensitive exposure. And my focus in looking at that was, what is my sensitive exposure? And typically, a sensitive exposure would relate to mostly the promoter funding. And I would then go into the promoter funding, relate to it, and say, is it a good promoter or a bad promoter? Do I understand? So this is where the bio and chemistry came into play, which is, you understand from the bio is all about the individual, his business relation, his understanding, his perspective, and what are people saying about it. That is chemistry, right? So therefore, understanding the DNA of the individual helped us make some wonderful decisions. Whereas one of the advisors came to us and said, please sell Vedanta, one of the mutual funds which had an exposure to Vedanta. And when I went into the details with the fund managers, and I started to understand, and then I related to it, and I said, oh, and so we actually increased our exposure in the fund which had Vedanta, and we decreased our exposure in one of the funds which was overexposed. It will be unfair for me to name that company, and fortunately, that company went under, and we were lucky to have pushed out. So 4% of the fund's exposure was on that company. Uh, the other piece that comes into, which we quickly realized, I talked about direct access to our direct access to decision makers, and therefore we were able to take equity decisions directly by ourselves. And our initial portfolio came down from in equity 100% third party to more like uh, 50, 60, or 70% of equity, which is direct, both listed and unlisted. So we were amongst the few investors to have got into OAO and NICA. Uh, you know, the philosophy around uh, private equity or unlisted equity was how do we relate to the promoters? And we would spend a lot of time in understanding the promoters. Unless you understood the promoters, the founders, in this case, let's say Ritesh Agarwal, we spent a fair amount of time. I personally spent a fair amount of time with Ritesh. My boss Sunil Gunjan spent time. So, I must admit that Mr. Munjal's understanding about the ecosystem, about the trends that will change the world. I have yet to come across somebody who is as knowledgeable as him in terms of, and he also has tremendous respect within the business fraternity, both in India and overseas. So it was a wonderful process of our decision making where I would really identify the opportunity, get some homework done, and then present it to him. And he would give his very different perspective. And within a few months, a strategic asset, it could be months. So this is how we looked at it. So I used to see myself as a CEO of that fund and Mr. Munjal as the executive chairman of that, of the family office. And he would be completely engaged. Uh, so I'm not saying that you need to be spending 100% of your time on family office. The issue is that there are less moving parts in the business that you relate to. So, which is why I say, if you enjoy the journey as you enjoy the journey of running a business, you will be at calm with yourself. So, let's take an example: IFS and Yes Bank happened. The equity markets took a beating, and we were very transparent in our approach. So we called an emergency meeting and we said that, this is where we are. Now, the impact was in percentage terms very low, but in absolute terms, it was, reasonable. So we asked Mr. Munjal, what should you do? And he said, no change. Why did he say no change? Because he was involved in the decisions. He was engaged in the decision process. I'll give you another example of this. So when we were running this, after a year, when we said, why is it that we have made uh, significantly higher returns versus the mutual fund and the PMS, and it was to the order of magnitude of 4x of what we got from the others. So the reason was, and these are all these fund managers or PMS guys are wonderful people, much more knowledgeable, much more close to the market. But the reality was, so a couple of fund managers that I spoke with, they said we are constrained for two reasons. We don't want the money now, and we tell our salespeople not to give us the money, but these guys won't stop because they are after market share. On the other side, with so much money pouring in, we have to take exposure. So one of the funds which started off with 55, stocks or 45 stocks when we had invested had eventually 75 stocks because of the limits or constraints that they had on the processes. I'm sure these guys were not even expecting that their fund size will grow from, let's say, 6 or 8,000 crore to 20,000 crores. And these are two different ball games. The rules have not changed because you are working for the third party, you are holding a fiduciary responsibility, whereas a family office can have, can take more reliance on the bio and chemistry. While I was running the business, and I had full authority, but I was also working like a fiduciary, responsibility for the family, and therefore I would be cautious. But the having understood the risk appetite, it became a wonderful, it was a sale through. Now, let me give you some examples of, before I open up this for question and answers. And I will ask, Forum State, if you can respond to me, should we have a hard stop at 8 o'clock or 8:15? Forum, can you, just send me a message confirming this? Okay, I'll go on. I'll not stop. So, I'll give you a couple of examples. Some of these are already there on my website in the video, but, I will still repeat. So when we talk about family office, or our engagement with our balance sheet, the balance sheet engagement is very, very low. It is minuscule. So I'll give you an example here. When I was running the treasury for Ranbaxy. I made for the family 72% IRR, whereas I completely I lost out my complete wealth because I was enjoying the journey uh, of running an office. My broker would call me up and say, Rohit, there is something that I need to speak to you about. And I would say, personal or official? He would say, personal, and I will put the phone down. So we enjoy, and this is a story for everybody, whether it is family, high net worth individual. I was speaking to one of the large private equity, almost like a managing partner of a firm, a $10 billion firm. And he said to me, Rohit, you talk to all our private equity friends, they have zero time to manage their wealth. And since I had seen it personally, and therefore I could relate to it. But it is incumbent for us to not only just manage our P&L, but also to manage our balance sheet well. And therefore, when I moved on, the first thing I did was from the Hero Group. The first thing I did was to, you know, said, there is my balance sheet. What am I doing right or wrong? And depending on my risk appetite, because I could take my own calls, and I knew that my children are well settled. I do not have you know the need to be looking at a private jet or whatever. Right, I'm happy with four wheels, whether it is A car, B car, C car, it doesn't matter. And the only thing that matters to me is that I would, if I travel, I will travel in business class overseas. I will stay in 5 stars, and that was my only thing. And that's what gave me the confidence. And therefore, I could take calls, I could take risky bets. And today, I have invested more in the unlisted space. The advantage of investing in an unlisted space is that you are not focusing on mark to market on every day. And my unlisted space investments are extremely interesting because I am not worried about will I make money or will I not make money. The fact is that I'm seeing so much energy, and the journey that I enjoy with the founders is amazing, and they teach me a lot, right? So it and because of which I took up this initiative of becoming a student of digital technologies, uh, to be able to give them contemporary advice, advice which is more relevant to today's context. The beliefs may still be the same, the values may still be the same, but the ecosystem has many things to offer, and therefore things will be different. I'll give you another example. So since the time I left Hero, I approached a few families. So one of which was the most interesting. So I said, this guy had got liquidity of almost around, 2,000 crores. I'm asking the numbers, and he was making a profit of 50 crores in his business. So I said, what do you think about how do you allocate your time? So he says, I spent a day in a month, saying it out of pride that, I have a family office, which was more like, people who have grown through the ranks, and they are trusted guys, nothing right or wrong about it, but I'm just sharing facts for you to make your own conclusions. So he's making a profit of 50 crores, and the mark, and his profit goes down by 5 crores. He doesn't sleep for nights together. And in 2000 crore, he has an equity exposure of, let's say, 300 crores, 15%, right? More safer. And then what happens? the market goes down by 10%, which is he's down by 30 crores mark to market. What should he do? Right? So he will have a few advisors come in and tell him, I told you so. Why are you getting into equity? Right? And he will, because he's not seeing family office as a business, he's likely to take wrong decisions. Instead of buying, he may sell. And I'm not saying buying or selling is right or wrong, but take an informed decision, enjoy the journey. So, therefore, for 50 crores, you lose 10%, which is 5 crores. Look at the impact that you have on your, good night sleep versus a 300 crores. So, I'll give you an example. हिंदी वाला कबूतर को अगर आंख बंद करके बैठ जाता है कि बिल्ली मुझे नहीं मारेगी तो बिल्ली क्या नहीं मारेगी, राइट? So you don't worry about the mark to market. Uh, the another example was I shared with you the review of mutual funds. Now these guys are not bad at all, and they are wonderful people. I just got a message that there is no voice. Can everybody hear me? Thank you so much. So, we went through the journey, and so when we were reviewing our portfolio, given that we had direct exposure, it took us 15 minutes by watch to complete our review of equity because we were so engaged, right? And for the mutual funds, it took us 4 hours for each mutual fund, and yet we were not clear. So it was still a black box. Are we really in it or are we out of it, right? Do I understand it as much? So the decision of outsource versus insource is a function of how much is at stake and what do I need to do. So one of my friends who's setting up a new business, he already had a business, and I was talking to him, how do you invest? So he says, I run my business, and that's my equity exposure. All other investments are in fixed deposit. I can get it out when I need. I am not worried. Mutual funds, look what's happened. So therefore, I mean, there is a philosophy in our mind that we we as a human race has lived to survive, and survival leads to fear, which is why you see these news is always negative and never positive, because in this journey our amygdala in the brain gets activated. It doesn't allow you to listen to any positive news. So that's the scientific proof of that. Uh, and therefore, we are bound to take wrong decisions because we are driven by greed, fear. If you are running a business and if you have enjoyed the journey, the probability is you will take a balanced decision. Whether you made money, you lost money is not important, but it is important to really enjoy the journey and not always focus on the outcomes. Outcomes are not in your hands. You can do your best to deliver. So Gita theory, focus on karma. Um, One of the other family offices that I was talking to, he says, Rohit, how can you help us reduce the expense? I said, excuse me, why do you want me to negotiate expense on your behalf? Because you can just call up the guy, and if you don't find value in him, you should tell him that those I am not going to pay you the money, right? You like it or not. So if you have a choice, you take that decision. You don't need a wealth advisor to help you reduce. But the main important piece that I conveyed to this family was, why are you so worried about what is he making? And why are you not worried about what am I making? So this is the interesting piece. There is a complete lack of trust in the ecosystem. Uh, I think I'm actually done with what I had to say. I know I went very fast. This was my first experience of conducting a webinar, which is like a monologue, and I'm not used to doing a monologue. So, if you have any questions, you can post it on uh, private messages. Otherwise, I will, just leave. So there is a question from Rakesh Kantilal, which says, how does one go about setting up family office? So I shared in my video, you know, uh, for me, even a 20, 30 crores is important, right? So family office is all about discipline. It's all about your objective. Why are you doing what you're doing? So whether it is 20 crores or 100 crores or 500 crores, or for Mr. Ambani, it is 100,000 crores, right? So it's a relative term. It depends on how do you want to engage and enjoy the journey. You can outsource this process to anybody, right? You can. But then you are bound to take wrong decisions. Forum, is there anybody else who has questions for me? Otherwise, I can wait for another couple of minutes for people to raise hands and pose questions. And if there are none, then I can sign off. And I deeply appreciate your time on a Sunday to come and listen to me, to come and listen to my first webinar. And I'm truly honored to have you spend your time with me. So there's a question from Anand Jain. Why do someone need to have a family office? So as I said, this is your balance sheet. You call it family office, you call it by whatever name, right? It doesn't matter. So you have to manage your balance sheet. You have to manage your respect. So if you are alone as a professional and you have nothing else to, you have nobody to respond to, you can take your own decisions. But please take whatever decisions are in sync with what you want to do. So let me give you my example. So I manage my wealth with an objective, or wherever I'm making investments, it is with an objective to relate to my higher purpose. And what does that mean? So, why am I investing in founders? I want them to, be aligned to the values, spread happiness, spread joy. It doesn't matter to me whether I get some credit or not, but so long as they are spreading happiness, I'm fine. So that is my higher purpose. And therefore, when I'm making investment in startups, it is not driven by what is my IRR. And I've written a blog on that. That whenever I made 12 investments in startups, and I have enjoyed that journey. So people ask me, you will have a multi-bagger. I said, I don't care, because I know what my needs are. And therefore, I just need to enjoy this version 2.0 of my life. I think Rakesh Kantilal asked the same question, any minimum corpus. I think I've responded to that. Uh, somebody is saying can't hear or see anything. So, I don't think I can help on that. There is a question, what is the corpus scope for us in family office business as advisors? This is an interesting question. Unless we believe, because families are not willing to pay for advisory fee, advisors are not aligned to the goals or the objectives of the family. The product managers are building products not specific to the family. Unless there is a complete alignment of incentives, it doesn't work. So, for example, I'll tell you, when if and when I get, let's say, a mandate from a family, right, to manage investments, for example, forget setting up the family, the values, etc., because you have to get into an entry and you start knowing the individual. So I will focus more on, if you make money, I make money. This is different from saying that I beat the index and therefore pay me, right? Which is where the issue is. The family is lost money, but I still want to get paid. Why should that be the case? So unless we get to outcome based, and that's when you will start to make sense to the families. So the offer that I've had from some families, and they said, why don't you come and join us in the family? And I have said that, I am enjoying my journey, so let me do that. Uh, if there is, let's say, an independent director who's truly independent and who is the, uh, a clone of the family who understands their value system, the probability is you will get what you want and they will get what they want. The product manufacturer needs to understand what the family wants. So, then there is a complete alignment. So, unless the system gets together and there is a complete alignment of incentives, there will all be, and matters of money are never based on distrust. Matters of money are always based on trust. And therefore, unless we are able to align our incentives, get that trust back into the system, it will always be a struggle and we will always think transaction. And I can understand the challenge for the advisors is that they have their quarterly goals. So, this is not a business, which is why I said that there is a company which is trying to disrupt, and clearly, my strong belief is in the 5 years, technology coupled with the right brain will get disrupted completely. The wealth advisor and the AMC will completely get disrupted. So there's a question, have you devised any practical method of asset allocation? I said to you that there are, the asset allocation is a function of whether you need the money for lifestyle, your own running operating businesses, new strategic business, philanthropy, and safety pot. So that should define your asset allocation. So I think these are all the questions. I don't think I have any more right now. But the watch tells me that we still have 11 minutes and 47 seconds to go. I'm happy to stay on for these 11 minutes. Uh, Please ask me as many questions as possible because I have to learn from you as much as you have to learn from me. It's all about a mentor-mentee relationship. As I said, I'm a 21-year-old with 36 years of experience, but the experience is basically around the values, the principles, the boundary conditions. Think win-win. So that's at a philosophical level. That is the running. Today, any technical advice will not make sense at all. So I think there is somebody asking me, how does one go about setting up a family office in the first place? Any minimum corpus is what I responded. But how one goes about setting up a family office, it all depends. What is your purpose? Are you transactional or are you looking at a long-term engagement with the family office? And trust me, once you have spent, let's say, in the first few months, you might have to spend 6 to 8 days, right? If it is a large family, it could be, over 8 to 9 months, because if you have to document everything, right? And if you need to create structures around it, if you need to define your policy, you take that much time. And please start a family office in the sense that I explained, if and only if you guys are prepared, because it could throw up some issues which would be very embarrassing to retrace back. So therefore, you need to be very clear that if it is a large family, if you really want to think of only investment, that's a different issue. But if you really want to think of a complete family office suite solution, please be very clear, why are you looking for it and what is the purpose and objective. Unless you have that, do not even take a step. You will actually create more confusion than anything else. So there's another question. The family office consultancy starts. I think the same should be reviewed on regular basis. I'll give you an example. I won't name the family. So this is a family which was, set up their code of conduct almost 2 decades ago, and I happened to meet with this founder, who has 3 generations in the company. And when I asked him this, so he said, "You have done a marvelous job by, creating a realignment within the family with no acrimony. It was all harmonious, etc." And he asked me that I created my document almost 2 decades ago. So I said, this has to be a living document. Unless it is a living document, it is and it is not flexible, you are bound to lose out. So look at how things have evolved uh, in the economy, rather in the finance world, because of the technology disruptions, or in healthcare, or wherever. So therefore, if family office is a business, it needs to rethink, evolve all the time. So the only thing which will not change is the values, and that's it. So when somebody is asking me a question, how you became a student of psychology, right? So psychology is all about understanding and relating to human beings as human beings. So for example, I call everybody as a dost, right? So right from a peon to a CEO or a president is always a dost. And that's a philosophy that I live with. So, if you are able to relate to people as human beings, you have arrived. You are done. I mean, you don't need to read any books. The books will only help you in becoming more tactical, right? And finding some tactical solutions. But other than that, it's just spirituality. So, what is my definition of spirituality? Spirituality is humility, gratitude, and acceptance. Everything happens for a good. So when I get up in the morning, I say, I'll say in Hindi, and my uh, इष्ट देव इज वैष्णो देवी सो आई से माता रानी इतनी खुशियां दी आपने तो कमाल ही कर दिया राइट यू डन वंडर्स फॉर मी आई एम सो हैप्पी and the next thing I say is, oh, what a wonderful day. And then the third thing I say is, stay confident and unwavering faith. And I have read a few things on the power of subconscious mind. I'm able to relate to brain. So I have Blinkist as a app now. But even before you get there, I'll give you another example. So somebody asked me what is the definition of happiness. So I said empty mind. And this guy says, isn't empty mind a house of a devil? So I said, no, it is the house of Buddha. So, this is how you start relating to it. And this is how you, start thinking of psychology, philosophy, and science are all correlated. It's all here in the brain. I think most of the questions that I have received, I've been able to preferred structure to set up. So, is there any preferred structure to set up family office in your experience? I would say each unit of a family has its own nuances, and therefore there cannot be. And when you are dealing with multiple human beings, multiple interactions, it cannot be a one size fits all. It has to be one for one. I don't think I have any other questions. So thank you so much, guys, and have a good evening. And please give your feedback and perspectives to the Aditya Gaj and his team. Thank you so much. God bless you all. Bye bye.